Here's a very quick rundown of what's going on in the stock market and the economy. So essentially, we just are getting out of earnings season. We still have a few reports to look at, especially on the retail side. However, earnings season has been pretty good. In fact, big tech, I would say, many of the reports looked fantastic. They were still growing a lot. AI is still the story. S&P 500 valuation, measured by the PE ratio, is pretty high. The stock market essentially isn't cheap right now. It's not the most expensive that it's been, but it's also not showing a quote-unquote value. However, investors are willing to pay a higher valuation for the S&P 500 because we're still seeing really good reports and growth from big tech and AI carrying things along. So investors are probably willing to pay a higher premium because higher revenue growth, higher profitability. You get the idea. What about the economy? The housing market is basically at a standstill. We are hoping to see lower interest rates over the next year. Will it be enough to boost the housing market? That's yet to be seen. We think it could definitely help with affordability if rates are lower, even with housing prices potentially going higher, because typically when you have rates go down, the demand may increase and maybe housing prices go up because of that. However, this could still make affordability better even if housing prices do go up with lower rates. Now, it depends on how much lower the rates go, so to be determined. Consumers are still spending. We are seeing retail sales still look pretty good. So overall, right now, what we're seeing, even after tariffs, which we still have a lot more to see there, we are seeing strong earnings growth for 2026 anticipated. Tech is still booming out, high growth. They're still doing well. We are still seeing a consumer that is spending. Maybe they're being more choosy, but they're still spending even on discretionary items. And we are seeing a housing market that we really need to revive, because if tech starts to fall, the bottom part of the S&P 500 could end up helping keep things afloat because they've been lagging. Think home builders, think certain types of retailers that cater to the housing market. We may start to see some of those companies do better as the housing market does better, which helps buoy an economy where tech might be seeing some slower growth going forward. Still waiting on a recession. GDP still looks good. We're still chugging along.